Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and basically we are discussing over the Banking Regulation Act, and in the previous lecture we had started with the provision of Banking and Regulation Act, which stands for the restrictions on the business activities. Okay, like we had discussed over what do you mean by the business activities. Okay, and also we had discussed the section 8 of the BRA. Okay, in section 8 we had discussed that the banks are not allowed to get indulged in the business activities, whether directly or indirectly. Okay, that's what we had discussed in the previous lecture. All right, on the directly section we said that the bank could not directly buy or sell goods and items to earn the profit. All right, for indirectly we said bank can't take stakes or can't acquire partnership in any firm or a company which is involving in buying and selling of the goods and services. All right, however, we had also discussed the exceptions. Like what are the exceptions to the provision? Okay, so I hope that you revise the previous lecture carefully. That's why I'm going to ask you the question. What were the exceptions provided to the bank under the section 8 of the BRA? Okay, you have 15 seconds to think and answer, and your time starts now. It's 1, it's 2, it's 3, it's 4, it's 5, it's 6, it's 7, it's 8, it's 9, it's 10, it's 11, it's 12, it's 13, it's 14, and it's 15. The time's up. So, the provisions were, the first was bills of exchange. Okay, during the bills of exchange, the bank could participate into the buying and selling of the goods, but not as an entity, but on behalf of the clients. Okay, second one was sale of collateral security. Okay, if the bank finds out that the customer is not able to repay the loan amount which had been granted to him, in such a cases the bank could sell out the collateral security which was deposited with the bank during the loan taking process. Okay, and the third was the ancillary services. Okay, so this is what we had discussed in detail in the previous lecture. All right, so I have just provided you a revisional overview of this section. All right, so in this lecture we are going to start with another important provision enumerated or provided in the act. Okay, that's what we had covered. Now we have the section 9. And the section 9 states the banks are not permitted to hold any immovable property except for what they acquire for their own use for a period exceeding 10 years from the date of acquisition. Within a 7-year time frame, they are allowed to dispose of or exchange a property to facilitate its removal. Now, this is just a definition. What we have, you can say read it out. But now the question is, what is the meaning? Thereafter, what is the applicability? There are two questions arises in front of us. What is the meaning of this thing and what is the applicability of that thing? Okay, so basically, if we go with the meaning, Okay, so its meaning states that banks are not allowed to keep any immovable property except the property present at disposal of bank for its own use. Okay, so it basically means the banks are not allowed to keep any immovable property except the property present at disposal of bank for its own use. All right, to understand the meaning and the scenario, first we have to understand what do you mean by immovable property, or what do we mean by movable property. All right, these are the two terms we need to understand. If we go with the first term, immovable property, this property is occupied a fixed space in an environment and couldn't be shifted or change place. Okay, so it's called immovable. Okay, the next is the movable. This property is not occupied any fixed place, an environment and could be shifted to other place easily. This is the difference. Movable property are such kind of property which could not be shifted to any place easily and they occupied a fixed space in an environment, whereas the movable property are the property which does not occupy any fixed place in the environment and they could be shifted. Okay, so basically if we take the example of the immovable property, okay, so they are like the buildings, lands, plant and machinery, etc. These are the example of immovable property. Why? Suppose if this is the land and then we had a building over it. This building as at place A, all right, and this is place B. So if we talk about this particular building, then this particular building will have a fixed amount of space. It means that suppose it is in 1 acres. So this 1 acre land has been occupied by the building, or you can say this 1 acre space has been occupied by the building. And if we want to change the position of A to B, we could not take A to B. We have to make a new building at B. Okay, this is building 1, this is building 2. So this is an example of a movable property. Similar with the land, similar with the plant and machineries. Okay, whereas for movable property examples, because they do not occupy any fixed space and they could be shifted easily. So these are like your computer, okay, like your table, like chair, etc. All right. For example, suppose if this is your table, okay, and thereafter you have a computer system on it. This is a CPU and this and that. All right. Then you want it shifted from this table to this table. Then you can easily shifted your system from this to this. Right? It is possible. That's why they are the example of movable property. All right. Now, I hope you have got the understanding of the immovable property and the movable property. Okay. So generally, the banks are not allowed to keep any immovable property, means any kind of building, okay, any kind of land, all right, any kind of plant and machineries, and etc., which are the part of the immovable property. They could not be held by the bank except for its own use. All right. For example, this is the bank XYZ. All right. They have two buildings with them. Building A, building B. Okay. The building A is basically the headquarter, but building B is basically the residential building not under the control of XYZ. In such a cases, XYZ could only sustain the building A. They could not buy or hold building B because building B is of the residential nature and is not related to XYZ in terms of utility. Okay, being residential, it could only belong to XYZ if the residents are being used by the employees of the XYZ. It means that the building is in the utility. But if the building is not used by any of the worker of the XYZ, it means that the building is not under the utility of XYZ. So the XYZ could not sustain it. And eventually the XYZ has to sell it out. All right. So basically, this is the meaning. Okay. Now comes to the applicability. Like on what basis this could be applied. This is main thing. Okay. So basically, this is the time-bound procedure. Now you will ask me, what do you mean by the time-bound procedure? What is the meaning of it? So basically, the banks are not allowed to keep any immovable property with themselves except their own uses, but for a certain period of time. It means that they could keep the property for certain period. All right. And this says like, first is the preliminary time period. Okay. Suppose this is the bank XYZ. Okay. This is the person who was taking a loan of 100 crores from the bank. Okay. Thereafter, he is not able to repay the loan to the bank. Okay. We had discussed the concept of collateral security. It means that if the 100 crores has been granted to him, it means the thing of the equivalent amount would be kept by the bank. So here, there is a particular land of worth rupees 100 crores, which was submitted to the bank as a collateral security. Okay. For example, or you can say additional example, the 100 crores loan was sanctioned for the time period of 15 years. Alright? Like within the 15 years, that person is required to repay the loan. Okay? But the 15 years time period was completed and still the person hasn't been repaid the loan. In such a cases, the question is till long or till how long the bank would be allowed to keep this 100 crores land with itself. For how long? So the time period is for 7 years. Till 7 years, the bank could hold the land provided to them as a collateral by this person. Okay, this is basically done to ensure that the bank should not sell out the property immediately and occur the loss. Okay, why? Let's take an example. Suppose the loan was taken in 2001 and now the year was 2015. In 2015, this person was defaulted on the payments. Okay, in such a case, the bank has the year till 2022 to sell out the land and recover the amount. The bank is not forced to sell the land immediately. Why? Let's take the example to understand it. That was the land of worth rupees 100 crores when it was submitted to the bank in the year of 2001. The person was defaulted in the year of 2015. Okay, during this time period, something happened that in the starting of 2016 to 2018, till this time period, due to some various changes in the macroeconomic scenarios, the price of the land was reduced to 80 crores. Okay, when it was submitted to the bank, it worth rupees 100 crores. When it was about to sell by the bank, it worth 80 crores. So in such a case, suppose if the bank is being forced by the authorities to sell the land just after the default, it means that the bank won't be able to recover the entire amount, right? Because right now they are only recovering 80 crores. It means there is a deficit for rupees 20 crores. Okay, but suppose instead of pressurizing the bank to sell out the land immediately, the bank has been granted with 7 years. It means till the year of 2021 come. Again, the prices of land rises up and right now it stands the position of rupees 110 crores. Okay, in 2001, 100 crores. During 2016 to 18, 80 crores, and now 2021, it's worth rupees 110 crores. Okay, so now if the bank sell out the land, they would be able to receive rupees 110 crores as a payment. Okay, and there are two things. The first is the principal amount. Second is the additional amount. Okay, so the principal amount is rupees 100 crores because that was the loan amount. But due to the present condition of the land, they got rupees 10 crores extra. So what to do with these 10 crores? Should the bank keep these 10 crores? The answer is no. Remember, bank is not allowed to keep the additional amount received on the collaterals. Remember it. Banks are not allowed to keep the additional amount received on collateral securities. Okay, So the question is, if the bank is not going to keep it, then who should we keep it the amount? The previous owner. And who was the previous owner? That person was the previous owner. Okay, it means that when the bank will sell out the land, whatsoever will be the additional amount incurred, like the rupees 10 crores, this amount would be paid to the owner. And the remaining amount means the principal amount will be kept by the bank. Okay. So now I hope you have got the exam understanding of the prelim time period, why the 7 years time period has been granted. Okay. The second thing is that extension of the time period. Okay. What is the implication of this thing? So let's understand. Even after the time period of 7 years, the banks are allowed to keep or to request, basically, to request the Reserve Bank of India to allow extension for 3 years additionally. Okay, it means that even if the time period of 7 years finished, thereafter also the bank could request the Reserve Bank of India to let them allow to keep the property for 3 more years. Okay, for example, suppose the loan was granted for 2010, so 1 to 2015. That was the time period. The person was defaulted in 2015. The land was worth rupees 100 crores, right? During the 2016 to 2018, the price were dropped to 80 crores. It means that, so during the time period of 2016 to 2018, the price of the lands were 80 crores. Okay. Original price was 100 crores. Now the price of 80 crores. It means there is a deficit for rupees 20 crores. Alright. So the bank waited. If we go with the 7 years time period, the defaulting year was 2015. It means that the 7 year will complete it in the year of 2022. Okay. So 2022 came, and even in the 2022, the price of the land was 80 crores. Okay. Right now it is the completion of preliminary time period. Okay, it means that the time period of 7 years is completed. Okay, in such a case, additional 3 years could be granted. It means that the year was completed in the 2022, but 3 more years could be granted. It means the banks are allowed to keep the property till 2025. Okay, but in the 2025, whether the price increase or decrease, the bank is not allowed to keep the land. The bank eventually will have to sell out the land. Alright, whether in the profit or the deficit doesn't matter, but they have to sell it out. It means that there are two time periods, preliminary and thereafter secondary or extended. Okay. Preliminary time period was 7 years. Extended was 3 years. So maximum time period was 10 years only. Alright. So maximum 10 years the bank could hold the immovable property. Thereafter, eventually they have to sell it out. Alright. Now, third provision was exchange of property. What is the provision of exchange of property? Basically, let's understand. Banks are allowed to exchange the property with another property for their use and flexibility. Okay, bank could do it. For example, this is the bank XYZ and they are lies at city A. Okay, and they want a building which lies at city B. Okay, the owner of that building is Mr. P. Alright, in such a case, the bank has a land rupees 100 crores. The cost of the building was also rupees 100 crores. In such a case, with the mutual consent, it means the XYZ has to talk with the P. And if they decided commonly that they should exchange, so this land would be granted to Mr. P and this building would be granted to Mr. XYZ bank. Okay, it means that the building and the land would be exchanged for each other. That fellow will get the land of worth 100 crores. XYZ will get the building worth 100 crores. Okay, this provision is also allowed to make sure that the banks are flexible in operations. Alright, so this is the provisions. Now comes the implications, or you can say rationality behind such a provision. The first rationality is focus on primary banking operations. Okay, it means that to ensure that banks are focused on accepting and accepting and granting activities useful for economy and customer as well. Okay, instead of becoming a company or organization or a trader or merchant, bank should focus on the activity of accepting deposit and granting loans for which they had been introduced. Okay, this is the first implication. The second implication is that protect the bank from real estate market risk. real estate market list. Basically, real estate refers to the industry of construction, like making a buildings, resorts, and acquiring a land and all this thing. Okay, so to protect the bank against the real estate risk. For example, this is the bank XYZ. Okay, in the year of 2001, they had bought a building for rupees 500 crores. Okay, but later on, the 2008 comes when they have to repay this 500 crores to the owners, or you can say to the depositors who deposited the amount with the bank. But in the year of 2008, the price of the building was only 450 crores. It means that there is a deficit of 50 crores. Okay, so that's why to protect the banks and their owners and their customers from the real estate market, it is provided that the banks are not allowed to get indulged in the buying and selling of the immobile properties. Okay. Third implication was liquidity consideration. Here the liquidity refers to the cash. It means that banks should maintain the proper cash reserves with them instead of investing money into the real estate market. Because in the real estate, remember this thing, your investment could not be liquidated easily. For example, this is the person who invested rupees 100 crores in a land, and he bought a land of rupees 100 crores. So whenever he want to sell it out and get the cash back or liquidate the asset, okay, remember this could not be done overnight. It will take a time to sell out the land and get the cash. Similar thing happens with the bank. Instead of that person, if this is the bank XYZ and they had invested of the depositors' money worth rupees 10 crores in the land, then they wanted to sell out the land and get the cash and repay it to the depositor. Okay, then it could not be done overnight. It will take a time. That's why it is to be ensured that the bank should not be indulged in the purchasing and selling of the immovable property, except for some cases, as I have told you. Okay, so students, in this provision, we had finished with the section 9. I hope that you have understood the concept carefully. In the next lecture, we will start with another sections. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.